All right, Chase, we ready to talk about, let's see, Lockheed Martin?
Yeah, let's look at Lockheed.
All right. Lockheed Martin and obviously defense contractors in the news as well here. But Lockheed Martin, their aerospace and defense contractor, short is only 1.5%. So nobody expects this to go down. 75% institutional owned. PE ratio is on the high side. It's 30.3, but the whole industry is high. And I think that's because Trump is in office, that everybody knows defense is going to be a good place to be. Price to sales 1.7 versus 3.2. That is a positive. Price to book value 20.3 versus 7.8. Price to cash flow 20.1 versus 34.4. PEG ratio does look very good though. 1.1 versus 7.5 means you're not paying much or very much for the future growth of the company. Now, this is surprising to me. Over the last year, earnings for Lockheed Martin are down 19.5% when the industry was up 15.7%. Maybe they had a write-off or something. I don't know, but that's a big drop compared to the growth in the industry. Sales for Lockheed Martin were only up 3.2%. I say only. That is actually better than the industry at 0.6%. And I love this 5-year growth rate from the analysts on earnings. So for Lockheed, it's 19.7%, and the industry is 15.7%. So the defense industry should continue to grow and do well. We do see that they pay a dividend, decent dividend, 2.5%. Use 73% of the earnings to pay that out. On the balance sheet, the current ratio is 1.1 versus 1.6. That's okay. The debt to equity is kind of high, though, 3.6 versus 0.7. I'm trying to think quickly why that would be. Could just be a lot of capital and investment to build the bombs and the planes or whatever they're building, but that's pretty
They
heavy.
build the fighter jets is their big kind of claim.
Yeah.
The F-35, I think, is their
F-35.
their main
Yeah.
kind of like thing that people know.
Yeah, I mean that's a heavy debt. I'll try to look at it when you're looking at some other numbers to see if I can see something that stands out on the balance sheet why that's so high. We do say have a net profit margin 5.7, just about the same as the industry at 6. Return on equity is very good, 68% versus 17.6. So maybe they have a very low equity with normal debt. That could be the reason why that number looks strange on the debt to equity. We do see, free cash flow, $4.6 billion, about twice the industry at $2.2 billion. Things are looking pretty good except for that debt to equity.
Yeah, and I did want to kind of bring up before we get into the numbers here, I mean, looking kind of at the general story, the reason they've been in the news this past week is, Trump came out with a defense budget, or a dream defense budget, I'll call it, of $1.5 trillion in 2027.
Isn't it like $1 trillion now?
A little bit under $1 trillion, yeah.
Wow.
So it's a big increase. And he said he wanted to, again, build a dream military is the goal there. And I want to point out that the president's wishes are not reality, right?
Yeah.
I mean, now he has to push this agenda and idea through Congress. And I believe that $1 trillion has not even been cleared yet. Right now, there has to be that reconciliation done in Congress, and that has not been finalized for us to even get to that point. So to now push through a $1.5 trillion budget for defense, that's going to be challenging, I think, for 2027, especially if Congress looks different next year.
And what do you think of him saying, okay, I'll ask for $1.5 trillion. If I get $1.2 trillion, I'll be thrilled.
It depends on Congress next year. I mean, if the Republicans lose the House, I think good luck with that. I think you're going to be very hard-pressed to even maintain defense at where it is now.
Yeah, it would stop all the good stuff we're seeing right now.
So. Well, and the thing that I look at with this particular news story is I wouldn't be buying into the hype, because I think the excitement around that $1.5 trillion number is excitement at this point. Is it going to be reality? I don't think so. I think 1.5 is a high watermark.
And I won't take it away from you, but the year-to-date number is ridiculous.
Oh, yeah.
It's only a week.
Yeah, well, let's look at the numbers here for Lockheed Martin. Again, their ticker symbol LMT. Current price, $542.92. 52-week range, $410.11 is the low. The high, $546.07. That was hit on Friday. As you said, year-to-date return so far, just we'll call it one weekend, 12.3%. So, gosh, that's been a great start to 2026. Yeah. Looking longer term, though, for this stock over the last 5 years, you've done well, up about 61%. And over 10 years, your return has been about 140%, not including the dividend. So, I mean, you're probably pushing 200-ish% over the last 10 years. Looking forward, though, for the company, this is where I'm going to say the disappointment comes. Going out to December 2026, estimated earnings per share of $29.01 gives a target sale price of $481.57. So, again, that current price, $542. Sell price 481. That's not a good spot to be for a value investor in my idea.
And I was looking at the balance sheet, and somebody messed with my balance sheet because it used to be the left was the most recent number. Now it's all the way to the right, so we got to correct that because it's hard to find it. But I just want to look real quick at the equity for Lockheed Martin. It's $6.1 billion, and the debt, the long-term debt, is $20.5 billion. That seems to be the norm. Back in June 24 is about $19 billion. More research needs to be done on that. That's just a lot of debt. I get worried on that.
And there are some negatives as well that Trump has brought up with these defense companies. He has talked again about limiting compensation for the CEOs. He's talked about limiting buybacks and dividends for these companies. And also, too, we can't forget that Trump is a negotiator. He doesn't want to pay the highest price for the F-35. He wants more realistic margins for these defense companies. So if he comes in and says, yeah, we're going to increase the budget to $1.5 trillion, but we're not just giving away $1.5 trillion, you have to give us something back as well.
Right.
That might not be super beneficial for the defense companies. Their sales might increase, but their margins might contract as well. So there's, I think, some puts and takes here, and I definitely wouldn't be overpaying for the earnings, the sales, and book value of these defense contractors.
Yeah, I think the time to buy them was probably about a year ago. I think now the ship has sailed, so to speak. And do they make ships anymore?
No, I think that General Dynamics is the big ship maker. Again, the only thing I know about Lockheed is the F-35.
F-35, yeah. But I don't think they make ships the way they used to. I mean, they were a big thing years ago, but now drones is the big thing. So, all right.